Are we in a recession? Anyone hoping the U.S. economy would finally return to normal in 2022 following 2 years of dislocation from the COVID-19 pandemic has been sorely disappointed. Supply chain disruptions, a war in Ukraine, elevated inflation, and higher interest rates are raising concerns that the U.S. economy is on the brink of a recession. Some economists recently said there is more than a 50% chance of a U.S. recession within the next 18 months. Several reliable economic indicators are flashing warning signs that the U.S. economy could be rolling over. Fortunately, the U.S. labor market remains strong, and experts are divided on whether or not a recession is inevitable in this unique economic environment. There is no universal definition for an economic recession, but analysts and investors commonly define it as 2 consecutive quarters of negative gross domestic product, GDP. Officially, the National Bureau of Economic Research (NBR) defines recession as a significant decline in economic activity that is spread across the economy and lasts more than a few months. The Bureau's economists, in fact, profess not even to use gross domestic product, the broadest measure of activity, as a primary barometer. They mentioned, a slowdown has to be significant, broad, and sustained before it qualifies as a recession. Currently, the economy is downshifting to a much slower growth path, but the decline in economic activity is not significant in our view. NBR also points out U.S. companies are still hiring and consumers are still spending. The U.S. economy added 372,000 jobs in June, far exceeding economist estimates of 250,000 new jobs. That type of job growth doesn't typically coincide with a U.S. recession. If the second quarter GDP number comes in negative, and journalists and the White House don't call a recession, it's bound to spark confusion and perhaps some anger from those who have been hit by surging inflation and a clear slowdown in aspects of the economy. After all, there are a lot of things that are making it feel like a recession, from sky-high prices, widespread product shortages, and warnings from companies like Walmart that profits are shrinking due to changing consumer habits, just to name 3. Despite market fears and warning signs, many economists say the economy is simply too healthy at the moment to consider current conditions a recession. Year-over-year job growth stands at 4.31%, the largest gain in almost 40 years. It's difficult to rectify how some are claiming the economy is in recession when job growth remains well above long-term averages and wage growth is the strongest in decades. Should you be worried about a recession? If the U.S. really does slip into a recession sometime in the second half of 2022 or 2023, there's no reason for investors to panic. First off, recessions don't historically last very long. The average duration of a U.S. recession since World War II is just 11.1 months, and the COVID-19 recession in early 2020 lasted just 2 months. U.S. recessions are also fairly common. Since World War II, there has been about 1 U.S. recession roughly every 5 years. While recessions can lead to job losses and other financial difficulties for Americans, they have historically been excellent buying opportunities for long-term investors. It can be extremely difficult for investors to time a market bottom perfectly, and stocks tend to bottom several months before a recession when peak pessimism is reached. But some stocks even have a track record of performing relatively well during recessions. For example, Target, TGT, Walmart, WMT, and Home Depot shares significantly outperformed the S&P 500 during the 2020 and 2008 recessions. If you want to know what to invest during a recession, click the video in the box or link in the description below. Hope you learned something. And why so serious?